Triumph IAS Daily Prelims Practice MCQ is a program that is exclusively designed for CSE 2023 aspirants. In this video discussion, we will discuss UPSC CSE Prelims previous 25-year questions.
Question number 1. Which one of the following statements correctly describes the meaning of legal tender money? Option A. The money which is tendered in courts of law to defray the fee of legal cases. Option B. The money which a creditor is under compulsion to accept in settlement of his claims. Option C. The bank money in the form of checks, drafts, bills of exchange, etc. Option D. The metallic money in circulation in a country. The correct answer is option B. Legal tender money is fiat money that cannot be refused by any citizen of the country. The correct answer is option B. Legal tender money is fiat money that cannot be refused by any citizen of the country for settlement of any kind of transaction. The legal tender is the money that is recognized by the law of the land as valid for payment of debt. It must be accepted for discharge of debt. The RBI Act of 1934, which gives the central bank the sole right to issue banknotes, states that every banknote shall be legal tender at any place in India in payment for the amount expressed therein. Question number 2. Which one of the following best describes the term merchant discount rate sometimes seen in news? Option A. The incentive given by a bank to a merchant for accepting payments through debit cards pertaining to that bank. Option B. The amount paid back by banks to their customers when they use debit cards for financial transactions for purchasing goods or services. Option C. The charge to a merchant by a bank for accepting payments from his customers through the bank's debit cards. Option D. The incentive given by the government to merchants for promoting digital payments by their customers through point-of-sale, POS, machines and debit cards. The correct answer is option C. Merchant discount rate on debit cards is the amount that a merchant has to pay to its service providers when a consumer swipes her card on the merchant's point-of-sales terminal. It is also applicable for online transactions and QR-based transactions. The amount that the merchant pays for every transaction gets distributed among three stakeholders: the bank that enables the transaction, the vendor that installs the POS machine, and the card network provider such as Visa or MasterCard. Question number 3. Consider the following statements. Option 1. The Reserve Bank of India manages and services Government of India securities but not any state government securities. Option 2. Treasury bills are issued by the Government of India, and there are no treasury bills issued by the state governments. Option 3. Treasury bills are issued at a discount from the par value. Option A, 1 and 2 only. Option B, 1 and 2 only. Option C, 2 and 3 only. Option D, 1, 2 and 3. The correct answer is option C. Times RBI is banker debt manager for both state and union government. According to Department of Economic Affairs, Times short-term debt of the central government on residual maturity basis includes 14-day intermediate treasury bills, regular treasury bills, dated securities maturing in the ensuing 1 year, and external debt with remaining maturity of less than 1 year. Times short-term debt of state governments comprises internal debt that includes market loans maturing within next 1 year and repayment of loans to center. Times T-bills are sold at discount and repurchased at par value, face value. Question number 4. Consider the following statements. Option 1. Capital adequacy ratio, CAR, is the amount that banks have to maintain in the form of their own funds to offset any loss that banks incur if the account holders fail to repay dues. Option 2. CAR is decided by each individual bank. Which of the statements given above are correct? Option A, 1 only. Option B, 2 only. Option C, both 1 and 2. Option D, neither 1 nor 2. The correct answer is option A. Times capital adequacy ratio is known. Capital to risk weighted assets ratio is used for the protection of depositors and promotion of stability of financial systems across the world. Times capital adequacy ratio is a measure of the capital of the bank which is expressed as a percentage of bank's risk-weighted credit exposures. Times it is decided by central banks and bank regulators on recommendation of Basel III norms to prevent commercial banks from taking excess leverage and becoming insolvent. Question number 5. A rise in general level of prices may be caused by: Number 1. An increase in the money supply. Number 2. A decrease in the aggregate level of output. Number 3. An increase in the effective demand. Select the correct answer using the codes given below. Option 1. 1 only. Option 2. 1 and 2 only. Option 3. 2 and 3 only. Option 4. 1, 2 and 3. The correct answer is option D. Times general price rise may be caused by an increase in the money supply as the real value of the money reduces. Times a decrease in the aggregate level of output will lead to rise in the general level of prices. Times effective demand also increases when there is less purchasing power due to inflation.